Welcome to ValueVest Daily. Today, we are diving deep into a company that just might be at the absolute center of the future of finance. I'm talking about Circle, ticker symbol CRCL. We're going to break down its business, tear into the financials, and see what Wall Street is saying to answer that huge question. Could this stock really be on its way to $200? Let's get right into it. And, the drill. A quick reminder, this is just for educational purposes. It is not financial or tax advice.
So, here's how we're going to tackle this. First, we'll set the stage, talking about this massive shift in the future of money. Then, we'll get into Circle's absolute core, USDC, and figure out what makes it tick. After that, we'll analyze its competitive advantages, its moat, run a full financial checkup, and then look at what the charts and the pros are telling us. And finally, we'll bring it all home and try to reach a final verdict.
Okay, let's just start with the size of this thing. The opportunity here is, well, it's staggering. Analysts are projecting that the market for stablecoins, these are basically digital dollars that live on the internet, could blow past $2 trillion. Yeah, that's trillion with a T. Let that sink in for a second. We're not talking about some niche little market anymore. This is potentially a foundational piece of a whole new global financial system. The size of that prize is exactly why this space has everyone's attention.
And that really brings up the million-dollar, or in this case, trillion-dollar question for us as investors. Think about the old gold rushes, right? You could bet on one guy finding gold, or you could sell the picks and shovels to every single person heading into the hills. So in this new digital economy, how do you invest in those picks and shovels, the fundamental rails that everything else is going to be built on? Well, that is the exact thesis we are exploring for Circle today.
All right, let's kick things off with our first section, the future of money. Look, we're living through this massive shift from the old, slow, kind of clunky financial world to something new, an economy that's built right on the internet. And right at the heart of that whole transition, you're going to find companies like Circle.
So what is Circle really? Well, they were founded way back in 2013, long before crypto was on everyone's radar, and they just recently became a public company. Now, from day one, their founders saw this future where money could move at the speed of light, and they made a hugely important decision. They chose to work with regulators, not run from them. Now, that was the harder path for sure, but it was a long-term bet that trust and playing by the rules would eventually become the most valuable currency in this space. And their mission says it all, to make money programmable and internet native. This tells you they're not just trying to create a digital dollar. They want to fundamentally change what money can do.
Okay, on to section 2. Because to really, truly understand Circle as an investment, you have got to understand their crown jewel, their core engine. I'm talking about USDC. This is the product that drives the entire business.
USDC, or USD coin, is what's known as a stablecoin. And all that means is that for every single USDC out there, there's a real US dollars worth of assets sitting in a bank account somewhere. And not just any assets, we're talking about cash and short-term US government treasuries, literally the safest, most liquid stuff on the planet. And that stability, that's its superpower. It lets USDC act like a trusted digital dollar for, well, everything. Instant global payments, paying a freelancer on the other side of the world in seconds. It's also the bedrock of the entire decentralized finance, or DeFi, ecosystem.
Now, USDC isn't alone. Its biggest rival is Tether, or USDT. But this is where it gets really interesting, because the difference between them is like night and day. Circle built its entire identity around being regulated, audited, and transparent. They publish monthly reports from top accounting firms so you can see the proof for yourself. Tether, on the other hand, well, they've had a pretty shadowy history with their reserves, which has led to a ton of questions. And this matters, because if people doubt what's backing a stablecoin, it can lose its dollar value, and that causes chaos. Circle's transparency is why big institutions and serious developers choose USDC. They just can't afford that kind of risk.
And this chart just drives that point home. See, when we say it's backed one-to-one, this is what we mean. There are no weird, complex, risky assets hiding in the closet. It's cash and short-term US treasuries. The boring stuff. But when it comes to your money, boring is good. For any big company looking to manage its cash, or for developers building the future of finance, this level of safety is completely non-negotiable.
So that brings us perfectly to our third section, Circle's competitive moat. Now, if you're not familiar, a moat in investing is just a fancy way of saying a company's sustainable competitive advantages. The walls that protect its castle from invaders. And for Circle, that moat is getting pretty wide and deep.
So Circle's moat has a few key parts. The foundation, like we've been saying, is that regulation-first approach. It just builds so much trust. But then you layer on some killer tech. Their cross-chain transfer protocol, or CCTP, is a total game changer. It basically lets USDC teleport securely between different blockchains, like from Ethereum to Solana, without a risky middleman. It just burns the coin on one end and mints it on the other. It's genius. And then you've got the partnerships. I'm talking big ones. Visa is testing USDC for settlements on its massive network. That is a huge vote of confidence. So you've got trust, you've got tech, and you've got real-world use. That is one tough fortress to break into.
And believe me, Circle is not just sitting around. This roadmap shows they have a clear plan for what's next. Their institutional blockchain, called ARC, is set to launch its mainnet in 2026. That's going to open up completely new ways for them to make money. And looking even further out, they're getting ready for things like Agentic AI commerce. Imagine your AI assistant booking and paying for your travel all on its own. They're also targeting tokenized funds, basically putting real-world assets on the blockchain. The key takeaway here is that they're building a business that's much bigger than just earning interest on reserves.
Okay, this all sounds pretty amazing, right? But a great story is nothing without the numbers to back it up. So for our fourth section, it's time for a full financial health check. Does the math actually support this bullish story? Let's dig in.
Let's just start with one single powerful number, 72%. That is the year-over-year growth in the amount of USDC in circulation. This is a direct measure of adoption. It's telling you that the demand for a regulated, trusted digital dollar isn't just growing, it's absolutely exploding. This is the network effect in real time. The more people use it, the more useful it gets, which makes more people want to use it. It's a beautiful cycle.
And that insane adoption, it's flowing right to the top line. In the fourth quarter of 2025, Circle pulled in $770 million in revenue. That is a 77% jump from the year before. So how do they do it? Well, mostly it's interest they earn on those huge reserves we talked about. But they're also growing other streams, like fees from their platform. And what's really exciting is that after a lot of heavy investment, they actually became profitable in Q4. That shows their business model is really starting to work at scale. Now let's take a quick look under the hood. The market cap is sitting around $21 billion. Yeah, the forward PE is pricey, between 69 and 75, which means the market is already expecting big things. But check out the balance sheet. The debt-to-equity ratio is almost nothing. For a company that's kind of like a bank for the new economy, that is so important. It shows they're building on a rock-solid foundation. And look at that adjusted EBITDA, up over 400% year over year. And maybe best of all, they're generating positive free cash flow. This is the picture of a financially strong company that's hitting its stride.
All right, let's switch gears for our fifth section and see how all of this translates to the actual stock. We'll check out the chart, see what the pros on Wall Street are thinking, and of course, look at the risks.
So from a technical standpoint, the trend is your friend here. But there's a catch. You've got key support down in the $75 to $81 range, and some resistance just ahead. Now, the super bullish part is that the stock is flying high above all its key moving averages. That's a sign of a really powerful uptrend. However, look at the RSI. It's at 79. Anything over 70 is considered overbought. So what does that mean? It just suggests the stock might be a little hot and could be due for a cool down or a small pullback. So for me, that might mean being patient and waiting for a better entry point instead of chasing it.
So who's buying this stock? This is always a really important piece of the puzzle. About 64% of Circle's shares are owned by big institutions. We're talking the huge funds and asset managers. And even more telling, recent filings show that giants like ARK Invest and Vanguard are net buyers. They're adding to their positions. When you see the so-called smart money putting billions of dollars to work and betting on this long-term vision, it definitely adds a lot of conviction.
And what are those Wall Street analysts saying? Well, the average price target for the next year is sitting somewhere between $120 and $125. That implies a pretty hefty upside of 45 to 50% from where we are now. But then you've got the super bulls, like the folks over at Bernstein, who see it going as high as $190. Clearly, the street sees a lot more room for this stock to run.
Okay, and that brings us to the grand finale. Section 6. We've looked at the market, the product, the moat, the numbers, and the stock. It's time to put it all together and answer that ultimate question: is CRCL a buy?
You know, a smart decision always means looking at both sides of the coin. The bull case is pretty clear, right? You're betting on a market leader in an exploding industry. It's protected by a powerful regulatory moat, and it has new revenue streams coming online.
The bear case, though, is just as important to understand. That valuation is steep. A lot of good news is already baked in. Their main revenue source right now is tied to interest rates, so if rates fall, so does their income. And of course, there's always regulatory risk and the fact that this stock is going to be tied to the wild swings of the crypto market. A prolonged crypto winter would definitely hurt.
So, what's the verdict? According to our analysis, it's a yes, but with a big asterisk. This is being positioned as a potential buy specifically for long-term growth investors. We're talking people with a 5-year-plus horizon who can handle some serious ups and downs. This is not a stock for conservative accounts or for anyone who can't stomach the volatility that comes with being tied to crypto. The bottom line is this: it's a long-term bet on a huge shift in how money works. It's not a trade, it's an investment in the future rails of the economy.
So we'll leave you with this final thought to chew on. After this deep dive, is Circle a potential fit for your portfolio? Let us know what you think. And hey, please subscribe, like, and share ValueVest Daily for daily learning opportunities before you put your money to work. And one more thing, drop a comment if there are any other high-risk, high-reward opportunities you want us to break down for you. Thanks for tuning in.